So what I thought we'd do is instead of doing it on the computer, I actually printed, I have paper of the 2019 annual report. And we're going to go through it quickly, and then we're going to do a little bit more digging in later on. So one of the first things they did here is they told us when their annual meeting was going to be, right? It was back on May 12th, 2020. And this is, the annual report usually precedes the annual meeting. So there's usually an annual meeting where the board of directors will address all of the shareholders. All right. So here we've got, I'm going to zoom in just a little bit. Okay. Here we've got our highlights for the organization. Here's our net sales. Let me come up a little bit on this. All right. Here's our net sales, right? We can see that net sales went down in 2019. What is net sales? Is that different than sales? Well, we'll figure that out. Net income, whoa, that went way down. 2 million down to 538,000. And then net income per share. How do they calculate that? Clearly, if this went down, this went down. But we want to find out what does that mean? Dividends per share. Well, their net income went down, but their dividends went up. What's going on? Net cash provided by operating activities. I told you this was an important element. Very important element. Expenditures for property, plant, and equipment. Again, looking at what are the capital expenditures. So of the cash that was provided by operating activities, it looks like they had enough cash to be able to support in 2019. They had enough cash to support their operating activities. Working capital, what the heck is that? Shareholders' equity, we have a pretty good understanding of that. Common shares outstanding at the end of the year. It looks like they didn't issue any new shares, nor did they buy any back. And then this is the shareholders' equity per common share. We'll try and figure out how to calculate some of that. So the very first part of their annual report, this is management's report. This is management's discussion and analysis of the company. This is not in any way, shape, or form a part of the financial statements that come under audit. This is just management's perception. This is management's description of what's going on. Comparing 2019 to 18, what's going on with dividends, property, plant, equipment, etc. And so what I recommend is reading a little bit about this to get management's insight. And there's a couple of pages of this, and also talking about the outlook for 2020. The management's report is signed by the chairman and the president, and you'll also notice this little caveat down here that this is all about forward-looking statements, and this is my blue sky get out of jail free card. So as long as I tell everybody that, hey, we can make forward-looking statements, but you can't hold us to that. Now let's get into the financial statements, right? And you're going to see what we talked about in our first class. Balance sheet. Here's all the different assets that we have. Liabilities, all the different liabilities that they have. And equity, and all the different things that constitute equity, or owners, basically the net worth of the company. Then we get an income statement. It's pretty small, right? I mean, look at this. Selling and administrative expenses, one line. There's a lot of stuff in there. Cost of goods sold. Net sales. We still don't know what net sales means, but maybe there's some more information later on. This is another statement that we haven't really talked a lot about. This is basically our statement of equity, or what's happening with our changes in equity. Well, as you can see, that going from 2017 to 19, the number of preferred shares we had, number of shares we had, what that amounted to, and the paid-in capital, none of that changed. So what made equity change? Copy in a little bit on this. What made equity change, as we can see, is from 2017 to 2018, I had net income and I had dividends that I was committed to paying. So when I pay a dividend, it comes out of my net worth. It's not an expense. It just comes out of my net worth. In 2000, going from 2018 to 2019, we can see that our net income is 538,314, and our dividends were more than twice as much. Again, dividends are not an expense, it's just a return of capital, return of equity back to the investors. We would likely see we would likely see these dividends under financing activities in the cash flow statement because the shareholders gave us money and now we're repaying them back in the form of a dividend. Let's take a look at the next statement, probably our statement of cash flows. And that's what we see here. So we've got cash flows from operations, cash flows from investing, and cash flows from financing. And the only thing they have in cash flows from financing is that cash dividends paid. What we saw in that statement of equity. Cash flows from investing activities, you can see that we've got expenditures, capital expenditures, that's for property, plant, and equipment. Proceeds from the sale of equipment. Proceeds from certificates of deposit, they view that as an investment activity, and then purchasing of certificates of deposit. And then the cash flows from operations is a little bit different than the way we've been doing it, kind of freehanding. What this is referred to as the indirect method. And we'll talk a little bit more about that later on. But this case, what they do is they start with net income, and then they make adjustments to it to come to cash flows from operations. Just as important are the notes to the financial statements. The notes to the financial statements provide us a lot of interesting information. Really tell us what's going on with the company. How are they dealing with inventories? How are they handling revenue recognition? How do they view cash and certificates of deposit? Property, plant, and equipment. What are the useful lives of these things? Here's more discussion of other issues around property, plant, and equipment. Income taxes. Segment information. Net income per share. You want to know how to calculate it? Let's read this. Net income per share of common stock is based on the weighted average number of shares outstanding of 966,132 shares. So I take net income divided by this, and that gives me net income per share. Use of estimates. And then some recent accounting pronouncements and what is going to be the impact of those pronouncements on this company. And then it gives us a little bit more detail, right? We can go in here, we're given a single line for inventory, and now I can get a better understanding about what inventory is made up of. Raw materials, work in process, and finished goods. I can also see what property, plant, and equipment is made up of: land, building, machinery, and capitalized software. It also gives me a breakdown of what's in some of their liabilities. Here's a breakdown of their income taxes, what's federal versus state. Here's some other reconciliations of income taxes. We got other income, which is interest income and just other sources of other sources of income. And then I've got segment information. So they've got, looks like, two main segments: the fastener segment and the assembly equipment. And then everything else goes into other. And then over here we've got a little bit more information on segments: fastener and assembly equipment. And then last, I've got commitments and contingencies and subsequent events. And the final page of this particular report that I'm looking at is the report of the registered public accounting firm. So this particular firm, Crow LLP, has reviewed this set of financial statements. They've audited it, and they're providing reasonable assurance that you can look at these financial statements and be assured that they comply with the accounting principles in effect in the United States. And it says specifically that you can look and see that the financial position, otherwise known as the balance sheet, and the results of operations, the income statement, and cash flows, the cash flow statement, are in conformity with accounting principles generally accepted in the United States. So what you see, depending on the kind of company we're looking at, you may see a variety of different ways of putting together their financial statements. What we'll do in the next few videos is we'll see how all of these things interrelate.